Welcome back everybody, and today we will discuss about section 33AB. Chai, right? Today we will discuss about tea, coffee, rubber development account. Tata tea, Lipton tea, if we think about Taj tea, Red Label, so many tea brands are there. So most of them are engaged in the growing and manufacturing of tea. They are into plantation, and this section talks about that if you are into tea plantation, that is growing and manufacturing of tea, coffee, rubber, then you are required to open an account with NABARD. NABARD stands for National Bank for Rural and Agricultural Development. So you have to open an account there, and that account is as per the scheme of the central government. Now, you as a tea company owner may ask, sir, if we open account there, if we actually deposit money there as per the scheme, what will we actually get? And if we have to deposit money, when should we deposit the money? So the answer is, you should deposit the money within 6 months of the end of the previous year. So we know that previous year ends on 31st March. From that date within 6 months, that is till 30th September. So you should deposit the money either till 30th September or till the due date of filing returns. So for individual it is 31st July, for company SSE it is 31st October. So write down the dates, and the September 30th or the due date of filing returns, whichever is earlier, you should deposit the money by the time whichever is earlier. Suppose it is individual SSE, then we should remember that it is either 30th September or 31st July, whichever is earlier in the assessment year. If it is company SSE, then 30th September or 31st October, that is due date of filing returns, whichever is earlier, that is September 30th. Like this you should remember. Okay sir, if we deposit the money within due date, what will happen? You will get the deduction. How much deduction? Either the amount deposited or 40% of profit, whichever is lower. Whenever income tax department give deduction, they always say lower. So how much? Either the amount deposited or 40% of the profit, whichever is lower. Now when I say 40% of profit, please remember, when I am talking about 40% of the profit, this 40% is before, the profit is before the 33AB deduction, or profit is before the set off of losses. So before the brought forward losses are set off, before 33AB deduction is claimed, we would have got some profit. Incomes minus expenditures, we got profit. Still we did not deduct 33AB, still we did not deduct brought forward loss. Such profit into 40%. Compare that with the amount deposited. Whichever is lower, you can claim it as deduction. Now let's come forward. Okay, you got the deduction. After that, what? You have to remember that you have to not only deposit the money for claiming the deduction, but you also have to submit an audit report under form 3CA. Under which form? 3CA. In MCQs they can ask. So when that audit report should be submitted? Who should submit the audit report? The chartered accountant should submit the audit report. Sir, by what time? 1 month before the filing of returns. Suppose for corporate SSE, returns should be filed on 31st October. Then you should submit the report at least 1 month before. Right? And for individual SSE, it is July 31st. So before that. This way you should remember. Okay, then we will go to the next step. Okay, you deposited, you submitted the audit. Sometimes if you are subject to audit under some other law, then again under this section we should do audit? No, not required. Okay, very good. Now come to the next story. Sir, can we purchase eligible asset? The answer is absolutely yes. If you purchase eligible asset, that is as per the scheme, then whatever you withdraw the money for the purpose, that will not at all be taxed. Of course, if unutilized cash is there, that is taxed. But if you purchase the asset which is eligible, the amount withdrawn and put to use for purchase of eligible asset will not be taxed at all. No worries. But there is a condition that whatever eligible asset is there, that you cannot sell for 8 years. You cannot sell for 8 years. Suppose if you don't sell for 8 years, what will happen? No problem at all. If you sell afterwards, in the 10th year, 12th year, no problem at all. But if you sell within 8 years, then whatever deduction you claimed, that is taxed under pgbp. Not only that, but on the sale, capital gain will be there. Suppose if you sell within 8 years to central government, state government, local authority or government corporation, or you transferred in the course of amalgamation or succession, then in that case government says that the deduction will not be taxed. Okay, the deduction will not be taxed as deemed income under section 41. This way we have to remember the entire topic. Now last part, which is very important, that okay, for eligible business what to do we understood, but what about not eligible businesses? The answer is very clear. Listen carefully. It may be like purchasing some plant and machinery for residential purpose or for guest house or for office, or it may be some plant and machinery which is appliances which is other than computers used in office. Maybe an asset under 11th schedule like plastic manufacturing plant, something like that, or maybe certain asset on which 100% deduction is there, like for scientific research asset. So these type of assets are all ineligible. Again I am telling, simply remember, residential assets, office assets other than computer, simply remember scientific research assets on which 100% deduction you got, and 11th schedule assets. So these are ineligible assets. If you withdraw the money for purchasing any of these assets, then entire amount withdrawn, entire total amount withdrawn for these assets is fully taxable. Now eligible, ineligible understood. Sometimes you can withdraw the money for other reasons, like if you are closing down the business or there is a dissolution of the firm, then what will happen? Entire amount withdrawn at the time of closure of business or dissolution of firm is fully taxable. But suppose if it is partition of HUF, if it is liquidation of company, if it is death of the assessee, then the amount withdrawn not taxable. The amount withdrawn from the deposit is not at all taxable. So deposit money is yours. They will be giving you back. Only thing, either you save the tax or not save the tax. That's what the only criteria here from income tax perspective. I hope you understood this part what I tried to explain. Now come to the next story. How to tax? So first thing, you got the income, right? You got the business income before 33 AB. Correct? From that you deduct 33 AB. You calculated till now, right? That you deduct that amount deposited or 40% of profit, whichever is lower, that you deduct from the income. Now you got the income, which is net of 33AB. Now if you are into tea business, you remember that 60% is agriculture, 40% is business. So here you have to multiply with 40% to get the business income which is taxable. You have to multiply with 25% if it is coffee grown and cured, and if it is coffee grown, cured, roasted and grounded, then by mixing chicory, without mixing chicory, something like that, then multiply with 40%. If it is rubber, multiply with 35%. So these percentages what I am telling are business percentages. Okay, some things, those businesses which are connected with agriculture, part of the income is agriculture income, part of the income is business income. Here farming is also done, in the factories some processing is also done. So that's why they said in case of tea 60% agriculture, 40% business. In case of coffee grown and cured, 25% business, 75% agriculture. In case of coffee grown, cured, roasted, grounded, mixing chicory, without mixing chicory, then 60% agriculture, 40% business. In case of rubber, 35% business, 65% agriculture. We know all these things. So what we are doing is, we are taking business income minus deducting 33AB and multiplying with business percentage. That's it, to get what is the business income. Clear? So when you do some numericals on this, do like this. Now come to 33ABA, Site Restoration Fund. Reliance Petroleum, Bharat Petroleum, Indian Oil Petroleum. Have you heard of such names? What these are into? Extracting petroleum from the ground and then finally supplying it, selling it. Now these companies have to be registered with Petroleum Board, Ministry of Petroleum and Natural Gas. Now the body says that you need to compulsorily open an account with SBI, and in that account you should deposit the money too, and that money should be deposited not within 6 months or not till the income tax returns. No, nothing as such. Till the end of the previous year you should deposit the money. And if you deposit the money till the end of previous year, you will get deduction. How much deduction? Simple. Amount deposited or 20% of profit, whichever is lower. Amount deposited or 20% of profit, whichever is lower, you will get the deduction. This amount you will get deduction, and 33ABA section over from my discussion perspective. Now sir, there are so many other things. I know. So many other things are same as 33AB. Whether it is eligible asset, ineligible asset, other reasons, all are same. So that's why we will not be discussing it. Just remember the same things in 33AB, that would do for you. Okay. So with this we concluded this part of the lecture. We'll meet in the next lecture. Till then, take care. Bye everybody.